All right, today we're going to play a little game. Think of it like a treasure hunt to find a healthcare giant that's making some serious moves in India. I'll drop the clues, you try and figure out the company. You ready? Let's do this.
So, first things first, let's set the scene. The Indian healthcare market, it isn't just growing, it is absolutely exploding. This is the world our mystery company is playing in, and believe me, the opportunities are just massive. I mean, how big of a boom are we talking about? The entire sector is clocking in an 8% compound annual growth rate. Now, what that really means is this isn't some one-time jump. We're talking about consistent, powerful growth, year after year.
And this isn't just about numbers on a chart. This is real physical infrastructure. Get this. Between fiscal years 2025 and 2027, we're expecting to see about 14,000 new hospital beds. To put that in perspective, that's a massive 35% jump from 2025 levels. Just incredible.
So, in a market that's on fire like this, you know some companies are going to stand out from the crowd. And one company in particular is being super aggressive about expanding its footprint. Any ideas who it might be? Let's find out if you're on the right track. Okay, so it is officially time to play Guess the Healthcare Giant. I'm going to give you 3 key clues that come straight from our source material. Pay close attention.
Here's your first hint. This company recently made a huge splash on the global stage. They bought the UK-based hospital chain Practice Plus for around 2,000 crore rupees. That is a very bold international play.
All right, clue number 2. Let's talk about their scale. They're running 18 hospitals all across India, and they've also planted a flag overseas with 2 hospitals in the Cayman Islands. And here's your final piece of the puzzle. Let's talk capacity. Right now, the company has a grand total of 595 beds across all its hospitals. Got a name buzzing in your head? I bet you do. Okay, let's recap. We've seen the booming market. You've gotten the clues: a huge international acquisition, operations in 2 countries, and that very specific bed capacity. The moment of truth is here. The company is Narayana Health. Hey, if you guessed that right, awesome job. This is the company that's been making all the headlines with its smart expansion and really strong performance. So, beyond the big buyouts, why is everyone talking about them? Well, for that, we got to dive into the financials. And let me tell you, the numbers tell a really impressive story. Just take a look at this. In the second quarter of the 2026 financial year, their sales just rocketed up by 20% year on year. That kind of growth shows you they have some serious momentum, even in a tough market. But, it's not just about bringing in more money. It's about being more profitable. Their profit margins also saw a really nice jump, hitting an impressive 24%. That means they're not just getting bigger, they're getting smarter about their business. So what's the secret sauce here? How are they pulling this off? Well, it really boils down to 2 things. First, they're simply getting better prices for the services they offer. And second, they've seen a shift towards more patients who are covered by private insurance, which is a big boost to the bottom line. But let's be real, a smart look at any company means looking at the whole picture. It's not all sunshine and rainbows. Like any business, Narayana Health has its own set of risks and challenges that we really need to think about. So first up is something called concentration risk. A massive 62% of the company's entire revenue comes from just 2 cities, Bengaluru and Kolkata. Now, you can probably see how relying that heavily on just 2 locations could be a little bit of a vulnerability. And what about the competition? How did they stack up? Well, it's kind of a mixed bag. Their hospital occupancy rate, which is basically how full their hospitals are, is sitting right around the average for their peers, about 60 to 65%. But their average revenue per bed is actually a bit lower than their competitors. That's definitely an area where they could improve. And all of this leads us to the final and maybe the most fascinating part of this whole thing, the valuation puzzle. In other words, given everything we've seen, what does the market actually think this company is worth? And this is where it gets really interesting. When you look at all the standard ways to value a company's stock, things like the price-to-earnings ratio or EV/EBITDA, Narayana Health consistently trades at a lower value than its peers. So you see the disconnect here, right? On one hand, you have a company with strong financials and really impressive growth. But on the other hand, the market seems to be saying, yeah, we're just not willing to pay as high a price for your stock as we are for your competitors. And that leaves us with the million-dollar question, doesn't it? Is Narayana Health an undervalued gem just waiting for the market to catch on? Or is that lower price tag a fair reflection of the risks, like that revenue concentration we talked about? That's the puzzle every investor has to try and solve. And on that note, we come back to where we started. So, how'd you do? Did you guess Narayana Health right from the clues? Thanks for joining me for this explainer.